Welcome to this week's look at the state of the New York City real estate market. This is for the week of September 29th to October 1st. Wow, already in October. Cannot believe how fast the fall is flying by. We are going to be looking at the statistics for the luxury market, for the Manhattan market and the Brooklyn market. At the end, I'm going to wrap it up, give you some great strategies to help you be successful in this market if you're an active buyer or seller. Also share some additional information with you that will be very helpful for you to have if you are currently in this market. There were 29 contracts signed in the luxury market last week. That is 6 more than the previous week. Definitely seeing a rebound in this luxury market. Keep in mind that luxury means in New York City, in Manhattan, means properties priced at $4 million and above. The number one contract was apartment 65 at 53 West 53rd Street, asking almost $47 million. This unit has been on the market for a while. In fact, since 2015, when they started marketing the building off of floor plans. So this price originally was $51,200,000. This is a condo that spans the entire 65th floor. It has 6,448 square feet. It includes 4 bedrooms and 4.5 bathrooms, a corner 39 by 36 foot great room, 30-foot master bedroom, and 37-foot kitchen, all face Central Park. 53 West 53rd Street was designed by Jean Nouvel with interiors by Thierry Despont. Amenities include a concierge fitness center, 65-foot lap pool, golf simulator, wine room, library, theater, storage, and a children's playroom. The number 2 contract was Penthouse 37 at 520 West 28th Street, asking $35 million. It was listed in June. The seller paid a little over $20 million for this unit back in September of 2020, redesigned the space in 2022. This is a triplex condo with a little over 6,600 square feet, including 5 bedrooms and 5.5 bathrooms, plus 2,552 square feet of exterior space. The lower level has 3 bedrooms and a balcony. The upper level has a 52-foot great room overlooking the High Line, plus 2 bedrooms and a kitchen. Upstairs is a glass pavilion surrounded by a roof terrace featuring a spa, hot tub, and cold plunge pool. This building was designed by architect Zaha Hadid in an ultra-modern style. Unfortunately, Hadid died in 2016, and it should be noted that this 39-unit condo is her only New York City residential commission. Her design incorporates handcrafted metal, glass curtain walls, and curved balconies, all overlooking the High Line. Amenities include a concierge fitness center, 75-foot pool, and robotic parking. Robotic parking. I haven't seen that yet, but I would really like to. The total weekly asking price sales volume, $286,620,000. Average asking price, $9,883,448. Median asking price, $5,950,000. Average discount from original ask to last asking price, 9%. Average days on the market, 912. That's it for the luxury market. We're going to move on now, take a look at what's going on in Manhattan and Brooklyn. If you have any questions, as always, post them below, or feel free to reach out to me directly at Sotheby's. The fall season in Manhattan is definitely beginning to take shape. Supply is up for the week and demand rose 10%. We're going to hope that this continues. The supply for the week in Manhattan, 315 properties came on the market. That's down little over 20%. Contract signed 203. That's up almost 15%. Off-market properties 205. That is up almost 92%. Supply for the month 1,956. That is up almost 109%. Contract signed 778. Down about 7%. Off-market 662. That is up almost 27%. The market pulse is relatively in balance. It is up from last year. It's a little bit down from last month. It's looking like it's slightly favoring the sellers. It's largely a question of balance between supply and demand. Liquidity Pace chart 778, that is down almost 3% from last month and up just a smidge from last year. Okay, let's move on now, see what's going on in Brooklyn. The fall season in Brooklyn is showing some signs of life. Supply is up versus last year, and the demand increased by 6% on the week. Of course, I'm going to keep you informed on this. Just like with Manhattan, we're encouraged by this shift and hope that it will continue. The supply for the week, 176, that is down almost 20%. Contract signed, 114, down almost 7%. Off market, 126, that is up 121%. The supply for the month in Brooklyn, 993, that is up over 43%. Contract signed down about 5% at 509. Off-market properties, 343, that is up almost 25%. The latest market pulse reading in Brooklyn shows quite a balance here between buyer and seller market. Let's see what goes on. It's definitely up from last month and up from last year. The Liquidity Pace chart, 509 properties were signed over the last 30 days in Brooklyn. That is down a little from last month, up from last year. Let's move on now. I'm going to wrap this up. I'm going to share some additional market information with you, mortgage information with you, as well as strategies to help you be successful if you are a buyer or seller in this market. Take a look at this mortgage rate chart. You can see that for last week, we saw a little bit of a drop in the rates for the 30-year conforming. The non-conforming actually rose a little bit. Look, what we're really hoping for here is that the mortgage rates resume their downward trend. If that happens, we should see a pickup in both supply and demand, hopefully led by demand. I will continue to keep you updated on what's happening in the mortgage rates, but for right now, not really any huge changes. I'll have to wait and see. The next two charts I want to share with you, we'll start with Manhattan, is looking at the year-to-date cumulative supply and demand. Manhattan supply is having one of its busier years. Demand is relatively stagnant, let's call it that. That being said, while supply is having, let's call it a busier year, it remains more or less in balance with demand, which you could see from the Manhattan Market Pulse chart that I shared with you. Hopefully the demand will start to pick up as we continue to move into the fall. We usually see this happening in October. The properties come on the market by the end of September. Buyers are kind of back in the market. Then they're looking, once they feel they have seen what's out there, if something works for them, they will start making offers. So we should start to see that kicking in the next few weeks. Brooklyn's cumulative activity through September, this year we see that supply leads demand in terms of ranking, but both supply and demand remain more or less in balance as compared with what we've seen in the last couple of years. The same principle here as far as buyer engagement holds true in Brooklyn. Usually any buyers that are coming out in the fall will be in the market now, and they are starting to looking, seeing what might work for them. Once they determine that if the rates work for them or they're paying cash, they'll begin to make those offers. if we look at the supply for Manhattan, we see the total supply is 6,813 in Brooklyn, 3,504, pending sales 2,890 for Manhattan in Brooklyn, 1,811, off-market property totals 3,799 in Brooklyn, 817, average days on the market, Manhattan 79, Brooklyn 59, and as I mentioned, this liquidity pace for last 30 days in Manhattan 778, Brooklyn 509. That's a lot of information, as it always is. Well, what does this mean though? If you're an active buyer or a seller, how are you supposed to use this information to help you? So one thing to be aware of, very important thing, it has to do with the balance of the market. This is important for sellers because it helps them understand where their asking price needs to be. If there are really only 3 ways to price a property, and it always needs to be in alignment with the market in order to be successful. So if in this case we are in a neutral market, therefore sellers, you must make sure that your asking price is in alignment with the other prices of your competitors, and more importantly, that it positions you as best in your class. And perhaps even more importantly, you want to look to see where your competitors have actually been successful and gone into contract, because those are the success stories. And the active properties are the active properties. That means they're still sitting on the market. You can take what you want from that, but the longer something sits on the market, the less it's worth and becomes, let's call it a cautionary tale. So sellers, pay close attention to your asking price. You hear me talk about this. Hopefully, I've given you some insight as to why that is so very, very important. And remember, asking price is not the selling price. The asking price is part of the strategy. Just like your photos, just like the floor plan, just like the videos, just like the write-up and all the other things that go into marketing your property. The asking price is intended to attract buyers, get them excited to see your property and making appointments, and hopefully then very quickly making offers. Buyers. This is a neutral market, as I said. We are not seeing much in the way of decreases in the price action. So if you're looking and you're seeing properties that are, let's say for the properties you're looking at, they're all kind of priced similarly for what they are. That most likely means that those sellers have been advised to follow the market. If you should see something in, let's say, that group of comparably priced properties that are truly kind of comparable to each other, be guided accordingly if you want to make offers on any of them. It also would be very helpful to be looking at how many days they've been on the market, because the less time it's been on the market, likely the less negotiability you will have. Again, just, if you really want something, don't go in with a super low ball offer unless a property has been on the market for a very long time. Let's say at least 180 days. I don't believe that is a great strategy, because very likely it will just cause the seller to turn away from your offer and you as a buyer. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.